Welcome to this webinar, which looks at costs and profit and loss format within foreCASH. The standard P&L format within foreCASH is shown as follows. Sales, less cost of sales such as materials, subcontractors and/or labour within your products, giving a gross margin. Then any direct costs, perhaps shipping, carriage or packaging, which are driven by your level of sales or purchasing activity, to give you a net margin. Next comes overheads, whether salaries, property or general overheads. These costs can be referred to as fixed costs as they don't vary much until you see a step change from, say, an annual review or opening in your office. This leads to EBITDA, earnings before interest, depreciation and amortisation. By default, any depreciation or amortisation comes next. This is often separated out as having paid for a fixed asset, the depreciation charge, which spreads the cost over a number of years, is then a non-cash charge each month. Thereafter you have EBIT or operating profit, interest costs and profit before tax. Highlighted on the right of the screen are some links to detailed videos on some of these areas, but let's look now at the highlighted lines. Firstly, direct costs. Costs directly related to activity tend to vary in line with sales or purchases and forms part of the net margin. Hence, the first two bases that you can use for setting up direct costs here are percentages of sales or percentages of purchases. You can always revert just to entering amounts manually or putting a monthly feed from Excel if need be. So having selected percentage of sales as the basis, I can then determine whether I want to use all sales, or potentially I might say it's just selected items, so I could just pick general sheds but not super sheds as this particular driver on the cost. Other alternatives would be to select product category, so we might select sheds, which would pick up our general sheds as well as our super sheds, say. Or you may just say I want to select a cost by customer. So if there's a particular carriage charge that's associated with B&Q, you could drive the cost on that basis. The payment options on direct costs tend to be relatively simple. For example, you might just say, we've got a direct cost being driven by sales activity every month. We get a bill at the end of the month and we get 1 month's credit to pay for it. Generally, it makes sense for the direct costs to appear in the P&L in the default position, but there is still the option to position them within your P&L within overheads. So if perhaps there was a cost which you tend to classify as an overhead within your reporting, you've still got the option to actually use the percentage of sales basis to drive the cost amount, but actually put it further down your P&L report. Turning now to overheads. So overheads tend to be broadly fixed costs. And the parameters and drivers you can set up here tend to focus on the cash flow or the payment patterns. So if perhaps rather than a simple monthly payment pattern, you've got a quarterly payment for, say, rent, then foreCASH can make sure it handles that for you, where you've got an even cost over the month, but you're recognizing when the invoices come in for VAT purposes and when the payment is going out. Or another example might be an insurance payment where you have an annual payment, but you want to make sure again that that cost is spread evenly over 12 months. Now, while overheads by default are a fixed cost and assumes it's a flat monthly amount, you do have the option to change the settings to, say, amounts vary, or you could use a monthly fee to change the amount as you go through the forecast. So you may have a regular amount, but it might increase once a year, or it may be you're opening a new office or taking on some extra staff. Again, default position for overheads is within the overhead section, obviously, but if for whatever reason you do need to put a cost that was created as an overhead into direct costs, you can do that. Again, the reason you might do that is if there was an unusual payment pattern, or similarly, you might have an overhead called bank charges and decide that rather than putting in overheads, you want to move it down into finance costs, and that's the third position you can put a general overhead. Thinking about salaries, the default position for salaries is an overheads, but you may have some costs that you attribute as a direct cost, say a sales team. So again, you can change the flag or setting there to change the position in the profit and loss. And lastly, in terms of fixed assets or intangible fixed assets, The default position for amortisation depreciation is after EBITDA, but you do have the option to move it up into direct costs or overheads if you need to, in order to better align with your in-house reporting. So in summary, foreCASH has default positions for direct cost type records and overhead type records, where the drivers and rules which seem best suited to that general type of cost have been set up. However, if you do need to change the display position, you do have the flexibility to do that. We can see therefore that the direct cost section of your P&L report could contain a foreCASH direct cost type, but also a salary, an overhead that's been moved up, or depreciation or amortisation that's been classified as a direct display position. Similarly, overheads as well as general staff, property and general overheads could include a direct cost that's been moved down into the overhead position, or again include amortisation and depreciation. The entire list of positions for the costs are shown on the screen, where there with those highlighted in blue as those that have been moved out of their default position. That concludes this overview of foreCASH cost types and their position in your P&L report. For more details on these costs and also sales and cost of sales, please consider the video links that are shown on the screen there. Alternatively, please contact us for more help via email or phone. Thank you for watching.